What is going on, everybody? Hopefully, guys are doing well out there. It is Friday. The weekend is here, and it's also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had Apple ditching their plans to make an electric car. We have Google reeling from its AI debacle, and we've got a lot of news to cover, so we better kick things off like we always do with Meta Platforms. Start of the week at 484 and some change in this stock, pretty much like all of them except for Apple, continuing to churn higher, up over 3.7% to finish the week at 502. This stock, like a few others, hitting a fresh 52-week high. Now, Meta wants its new large language model to deal with contentious questions. Tell you what, Meta seeing what's going on with Google's Gemini, and they say that maybe their Llama 2 model, which was released in July of 2023, was, quote, too safe, according to some company executives. They want it to deal with some questions that it did not provide responses to, including how to prank a friend, win a war, or kill a car engine. Obviously, I think some of this has to do with Gemini. I think we also have to give a little bit of credit to Elon Musk as well. I haven't played around with Grok that much, but it is willing to kind of take on some of these issues. And I think Elon Musk said this week that he was going to train it to be able to explain these like million-page legislation and bills that are passed in Congress, and essentially be able to explain it to you in plain English and maybe explain some of the kickbacks and pork and lobbying, if you will, that is also contained inside of those bills. Tell you what, we're seeing an evolution of how these models are received by the public, and they receive some criticism, and these companies are going to have to continue to adjust. Mark Zuckerberg met with South Korean president and also is looking to Samsung to diversify its risk as it relates to manufacturing semiconductors. Currently, Meta uses Taiwan Semiconductor like pretty much everybody else, and a lot of companies, NVIDIA, others I've heard mention Samsung and using Samsung. I think this is just a negotiation ploy. Samsung can certainly fulfill some demand for Meta, but no one can replace Taiwan Semi, at least at the current time. Now, Meta is going to scrap its Facebook News in the United States and Australia. Apparently, that product, which I think was like a tab on the bottom of your Facebook feed, the number of users has dropped 80% over the last year as people just either want to consume their news elsewhere or they're just over the news. They're over maybe some of the biased coverage that you see in the news, kind of the one-way political slant it tends to be. People are just over it, and Meta's scrapping that. Now, if you're still a news site, you can continue to post to Facebook, and you probably can still use it as a traffic source. Now, moving on to Apple. So the week at 181.56, sliding down about 1% as Apple to finish the week at 179.64. Apple fell as Goldman Sachs removed the company from its conviction list. You can tell it's Friday. We're slurring our words here. They did reiterate a price target of about $232 per share. So considerable upside, even though it's not on that conviction list. Now, interesting story here as the iPhone 15 is seeing steeper discounts in China amid what they're calling weaker demand. Now, this is coming from resellers. This is not Apple or Apple's own websites or their own stores inside of China. These are resellers on the popular Alibaba, JD.com, and other sources to resell items in China. iPhone 15 prices are cut by about $180. That discount is steeper than the $120 discount that was offered last year right around this time. So it seems like it's traditional that resellers start to discount the latest model right around this time in China, but the discount this year is steeper than it was last year. Now, Apple canceling work on its electric vehicle. This is a rumor. There's always a rumor that they were even working on this electric vehicle since we never even saw anything and certainly didn't see it come to fruition. It's going to shift those employees to generative AI. Maybe think when this headline came across is Apple started working on this electric vehicle many, many years ago. The code name was Project Titan, and I believe even at one time they contemplated buying Tesla at one time to maybe kind of bolster up this unit or bring kind of an electric car brand into Apple. They obviously decided not to do that, which probably was a mistake given how successful Tesla has been since then. But Apple was chasing the electric vehicle market as it was once a very hot market and one seen ripe with potential. Now it makes me wonder if they're going to be shifting into generative AI and if that business is going to be looked upon similar to electric vehicles in 4, 5, 6, 7 years as one ripe with potential, but one that Apple couldn't deliver on. Now, Apple Vision Pro in the United States, those sales are starting to slow, and a global release date remains a mystery. It's believed that Apple had an estimate to sell about 150 to 200,000 of these beautiful $4,000 ski goggles. Well, it's some estimates that the company will ship maybe 200 to 250,000 units. But what remains to be seen, first of all, it's likely a fantastic device, but at the price point and even the form factor that it currently in, probably not going to be a needle mover for one of the world's largest companies. Moving on to Amazon, start of the week at 175 and some change. The e-commerce giant up over 1.6% to finish the week at 178.26. Also very close, or made a 52-week high this week. Figure AI confirms a $675 million investment from Jeff Bezos, NVIDIA, and others. This valued the humanoid robot startup, which is seen in the field of humanoid robots. Figure AI is seen as a leader right up there with Tesla. Some of the analysis that I've seen is Figure AI is as close to developing this as Tesla is. Well, they just raised money at a $2.6 billion valuation, which is obviously a lot of money, but in the grand scheme of things is a relatively small company. And they just sold $675 million worth of the company to Jeff Bezos, Kathy Wood, and several others. Seems like they just gave away a huge chunk of the company. But this shows, in my opinion, the massive potential. Humanoid robot is like Bitcoin at $10. It's like NVIDIA 10 years ago, talking about AI. It's like Google back in 2004 with its search engine. A $2.6 billion valuation on a humanoid robot company that could potentially turn into hundreds of billions of dollars. I think sometime in the next decade, we probably have a $1 trillion humanoid robot company. The demand and the need for it is just that big. Now, Senator Warren says it's time to break up the giants. And I'll just leave this headline here, because I think by now you know how I feel about Senator Warren and actually most of the senators and Congress people in Washington these days. Now, Amazon Web Services plans to invest billions of dollars into Mexico's cloud infrastructure, bolster up the Latin America market by about a $5 billion investment. I think this is where, obviously, you're going to continue to see growth in cloud here in the United States, but boy, there's a lot of growth outside of the United States, and you got to love Amazon getting out in front of that, or at least meeting some of that demand. Moving on to Netflix, start of the week at 586. Bubba boom, look at Netflix, guys. Shares of the streaming giant made a 52-week high, up 5.6% to finish the week at about 619. Netflix is tapping producer Dan Lin to take over its film unit. He's replacing Scott Struber. Lin is behind the Lego movies, which are very popular in my house, among other movies. So very successful movie maker now taken over at Netflix. Moving on to NVIDIA, start of the week at 797.67. And what the heck else is new? Shares of NVIDIA up 3.1%. Finished the week at 822.52. India is approving $15.2 billion worth of chip manufacturing investment over the next several years. They're going to give it to a variety of companies. And it looks like to me, The chip manufacturing obviously is more or less a monopoly, at least on the bleeding edge side. Not that many companies involved in manufacturing semiconductors. I think the whole industry gets remade over the next decade, but I still think, Taiwan Semiconductor has got a pole position there. Moving on to Google, start of the week at 141, and after that Gemini disappointment, shares of the search engine and fledgling AI provider Google down 2.8%, finished the week at 137. Google was down, obviously, as it pulled its AI face generator, and it continues to stay offline. CEO Sundar Pichai said that the results were, quote, biased and completely unacceptable. The AI model that was showing images of Nazi soldiers that appeared to be from other countries, and it also seemed to not even recognize that white people exist, might be relaunched over the next several weeks. This is just another example, guys, of Sundar Pichai, who I've been very critical about here on the channel. You've got a company in Google that really should be dominating this AI race. And we'll be talking about Microsoft in here in a second, which again blasted to all-time highs. Google, while the opportunity remains great, needs strong leadership and strong execution. And the Gemini flub over the last week certainly doesn't give me a lot of confidence that they'll knock it out of the park. Google hit with a $2.3 billion lawsuit from the European media group over its ad technology. What else is new? Google's warning that Microsoft's monopoly in cloud could be a threat to generative AI technologies. This is really rich, considering Google's monopoly in search has often drawn criticism, including from Microsoft. Now, speaking of Microsoft, shares of the software giant started the week at 410 and some change, up 1.22% to finish the week at 415.49. Microsoft to hold a non-voting seat on OpenAI's newly appointed board. This was agreed upon, I believe, several months ago when that Sam Altman kind of leaving and comeback tour debacle, if you will. Microsoft was guaranteed at least kind of a oversight seat on the board. It says that they have a non-voting seat, but I bet that seat is pretty darn important. Now, the SEC investigates OpenAI CEO for possibly misleading investors. Again, this goes back to kind of the November allegations that Altman wasn't consistently candid in his communications. There's still a lot of mystery and kind of cloudiness as it relates to that saga that lasted a couple of weeks. Maybe we'll get to the bottom of it someday, probably in legal documents. Now, Microsoft comes out with a new Copilot offering assistant to workers in finance. This might come of interest to many of you watching this channel. You now have Copilot for finance that's going to help financial analysis quickly conduct a varying array of analysis using Excel, using natural language prompts. It's currently now available to the public in preview mode. It's something that I'm going to try to get my hands on. Moving on, Microsoft poised to reap massive profits from general AI. That's according to Goldman Sachs. They're predicting the Azure business could scale up to over $200 billion. I think it's on a pretty close run rate to that. Maybe 120, 140 at the current time, maybe 150. So, and look, this was obvious late last year, even in like the midpoint of last year, once they started rolling out Copilot and they announced the pricing on that, like this was pretty obvious, and it's no surprise that Microsoft shares are surging. Now, because somewhat of a surprise this week, we had Snowflake, which is seen as a benefactor of AI and certainly a decent piece of that puzzle. Shares of that company plunged as the sales forecast really slowed down and the CEO left, and shares plummeted from over $230 down to under $190. Now, the valuation over at this company has been extraordinarily rich. Still a $62 billion company that's generating less than $1 billion, it looks like, in quarterly revenue. So I think this is more of a valuation thing than maybe an AI story, but certainly something to keep on. Not every company, as it relates to AI, is going to benefit. Now, Microsoft's ad investment may spark a $50 billion opportunity as the company continues to invest in, obviously, their search engine, Bing, and rolling out new features. I continue to buy ads on Bing. It is, in my opinion, is a great resource for traffic. Now, what's interesting is Microsoft offered to sell Bing to Apple when it was pitching its default search engine deal. This was back in 2018. For years, Microsoft has approached Apple to try to make Bing its default search engine for many years. Google continues to step up to the plate, upping the amount of money. I think this is wise for Apple. If I'm Apple, I don't get in the business of search engine. I might not even get in the business of AI. I might just make Microsoft pay for that. It seems like a pretty good business model, and certainly that default search engine, very valuable for Apple. Moving on to Tesla. Start of the week at $195, a little bit of a reversal. Shares of the EV maker up 3.5% to finish the week over $202 per share. Elon Musk made a little product announcement this week saying that long anticipated Roadster will somehow go 0 to 60 in less than a second. That would be almost dangerous, I think, but also very impressive and very fun at the same time. He's saying we radically increased our design goals for the new Tesla Roadster, which was announced in 2017 with a target launch date of 2020. But then we all know what happened in 2020, and the company decided, and I think the wise move, to focus on its core vehicles that it could manufacture right then instead of launching new products. An event, but like every Tesla new product announcement, it gets announced and there's a target date, and then usually it's 5 years later that the product actually comes. Now, the Tesla removed some price incentive for Model Y variants. You have the rear-wheel drive, the long-range version. Those price incentives of about $1,000 were removed. And it's looking at the current time. If you want to jump into a Model Y, you're in the kind of the $45,000 to $50,000 range, depending on which one you want. And I got one in my driveway, and I don't regret buying it. It's a very nice car. Now, Tesla is going to, or Elon Musk is going to sue OpenAI for allegedly putting profit over humanity. As most of you know, OpenAI was set up as a, quote, nonprofit organization, with Musk being one of the original founders of the company. He left. I don't think he has an equity stake here. Obviously, lawyers and people with lots of money will be able to figure this out better than I can. I don't know what standing that Musk has to be able to sue OpenAI, other than that he was a former board member or a former founder of the company. But it also is incredibly rich, considering Musk continues to develop and raise money for his AI platform that he is launching on Twitter. Now, China EV Watch, this is an interesting story, as Tesla is ramping up incentives in the great country of China, as existing inventory of Model 3s and Model Ys are getting thousands of dollars of incentives. In addition, Tesla is offering some insurance subsidies, more attractive financing plans, and discounts on its optional paint colors. The competition in China, absolutely fierce, and Tesla is just trying to keep that facility that they got there pumping with new cars. Now, what's interesting, though, is those Chinese brands coming to North America probably a little far off for a number of different reasons. Manufacturing and branding and marketing is one, but you also have the president of the United States, Mr. Joe Biden, ordering an investigation into the security risk for Chinese cars. If there is a perceived security risk for these China-made EVs, well, you're not going to see one on the road here in the United States anytime soon. Moving over to the technical segment of the show. Guys, this is not going to take long. You are in a very overextended or an extended uptrend as the S&P 500. You're looking for breaks of that trend. You're looking to buy the quote-unquote dip on that one. Moving on to Meta. This one continues to power higher and higher and higher. You're looking for a break of that trend. Meta, you're absolutely looking to buy the dip in Meta. Apple is in a unique position. It is essentially starting to flag sideways. since May of last year, you were between $165 and $200 on shares. You were smack dab in the middle of the range. A decisive break below for Apple should take you down to about 166. That would be the first area where I'd be excited about Apple. Amazon's looking absolutely beautiful. This is as beautiful an uptrend as you possibly can get. Should meet overhead resistance right up here at about we'll just call it 185. I mean, I guess there's a chance retail kind of piles in and pushes it higher. But if you get a rejection at those levels, you are looking, again, when shares are an uptrend, you buy the dip. When they're in the downtrend, like many other stocks that we've looked at here on the channel, you don't look to buy the dip. Speaking of an uptrend, Netflix is looking beautiful, looking meta-like as it continues to push higher. This one, it's actually is off the screen. You've got overhead resistance all the way up here at 700. So you got another $80 to go on that one. Speaking of overhead resistance, you're looking at like 950 or NVIDIA, excuse me, like 950 before you, I mean, that is, if you're looking for an area for NVIDIA to take profits and you don't take profits up here, I mean, I don't know. Maybe you're one of these people that just plan to hold the company for 20 some odd years. But I was doing research today on IBM and Sears Company and BlackBerry. And there's all these great companies. I mean, Sears used to be a great company. IBM, still a great company, but it was an even better stock at one point. BlackBerry was just an incredible stock. I'm not comparing NVIDIA to that, but there is reason and precedent to take some profits every once in a while, guys. Money's money. Moving on to Google. This one is in the smack dab middle of the range. This is the most actionable spot probably out of all of these stocks. If you love Google, and it is in a very much an uptrend, you're buying the dip on this one despite some of the fundamental stuff that's going on with management and Gemini. You're buying the dip at this level at 10. If you want 10 shares of Google, you're buying probably like a share or two at this level. Continued pullbacks in Google, especially all the way down here at about like 128, 29. Yeah, you're buying that. Moving on to Microsoft, straight up in the air. Pullbacks in Microsoft continue to be purchased. And finally, Tesla. First of all, the thing you have to note is shares of Tesla are basically the same price as they were back in literally 2020. So the share price of Tesla really hasn't moved much in about 4 years. Yes, we've deviated down to 100 and we've gone all the way to 400. So there's been some tummy aches and some roller coasters in there. More recently, we are making a very well-defined downtrend. Lower highs, lower lows. We've bounced off these lows. This is from a shorter term trade perspective. You peel off a little bit of your trade here. You trailing stop it probably all the way to the top. You make sure you exit your shorter term trade here with Tesla, because if this rally or this downtrend stays intact, you should make a new lower low at some point, probably later this year, down here at 150. Now, if this is the low and we reverse with Tesla, you would likely push above 263 heading into the spring and summertime with this stock. If you do that, it signals a very strong buy the dip opportunity on any type of back test to the top of the range or even a little bit further back. And as we covered earlier with Figure AI getting an investment, that humanoid robot division that Tesla is operating in, it's going to get more and more attention. And I tell you what, if this company can get to the top of the list as it relates to that, well, fundamentally, there might be some reasons to buy. Hopefully, guys enjoyed today's video. We'll be back again next week. Have a safe and fun weekend. Thanks for tuning in, and good luck with your investments.